Okay, morning everyone. Looking at the US stock markets, the Dow has again recovered from the triple bottom formation around the 23,500 points level towards the 25,000 psychological level. However, with the lack of follow-through buying interest beyond the 25,000 level has sent the Dow back towards the EMA 120, which is around the 24,500 points level, and it traded in a sideways manner over the past 1 week trading period. The Dow has gained about 0.9% or has risen to around 200 points on last Friday amid the strong unemployment data in May that fell to 18 months low. So with the strong recovery or strong economic data, we are expecting the Dow to trend higher towards the 25,000 psychological level. This could be the short-term breakout, the pullback towards the EMA 120, and a potential continuation pattern for the Dow to trend higher towards the 25,000 psychological level. Until we can see a breakout above that, only we can confirm that the Dow could be heading higher towards the 25,500 points or even towards the 25,800 points level. In the meantime, the 24,250 points will serve as the immediate support for now. Similarly, on the S&P 500, we did see the S&P 500 has recovered from the 2600 psychological level towards the 27 or 40 or 2750. Since then, we did see a healthy pullback on the S&P 500 just towards the EMA 120 around the 2675 level, and this could be the potential continuation pattern. This could be the breakout, pullback, and a continuation pattern for the S&P 500. Firstly, to retest the previous peak around the 2740, and upon the breakout and the closing above that, then we can see further upside for the S&P 500 to trend higher towards the 2800 psychological level. In the meantime, the 2675 will serve as the immediate defense for now. Okay, so updates on the crude oil prices. Crude oil prices alone has been rallying towards the 72, near the 73 US dollars barrel mark. Since then, we did see a sell down on pullback on the crude oil prices. And recently, on last Friday, we did see crude oil prices has pulled back and subsequently closed below the 66 US dollars barrel level. Following the violations below the immediate support around the 66, we are expecting further pullback on the crude oil prices towards the 62 level, while any gains will be just capped towards the 70 for now. The weakness over the past couple of weeks came after OPEC could be raising its output production in view of the high crude oil prices. Okay, some updates on the local front. The FMKLCI has again pulled back towards the 1710 level. Since then, we did see a 2-day recovery pattern. This could be the healthy recovery pattern on the FMKLCI that we are seeing. Should the FMKLCI breach above the 1760, we are expecting further bargain hunting activities after a heavy sell down from the 1880 towards the 1710, which is 170 points. This could be the bargain hunting activities that we're seeing for the FMKLCI. Should there be a breakout above the 1760, further upside will be seen towards the 1780 or even towards the 1800 level. So any recovery from now, it will be just taken as a technical rebound until we can see a higher low formation. Only we can confirm that the FMKLCI could be on the recovery phase. On the lower liners wise, we are seeing a similar pattern. We did see the advanced market index has once again pulled back towards the 13,700 points level. The support was formed earlier on in April, and since then we did see a technical recovery. Once again, we are seeing the FM's market index has pulled back towards the previous support level and formed some of the mild recovery pattern over the past 2 trading days. So for now, we are expecting further nibbling on the lower liners towards the 14,250 points level. Until we can see a breakout above that, only we can confirm for further technical rebound towards the 15,180 points. But should the lower liners were to violate below the 13,700 points, we might see further pullback towards the 13,100 points level. For now, the advanced market index is still forming the lower high and also the lower low formation. The downtrend is still intact on the low liners. Any recovery from now, we are taking as a selling to strength strategy. Some of the stocks that we can watch out for, firstly, would be Penta Master. Penta has again pulled back from the 3 ringgit and 15 cents towards the low of 1 ringgit and 70 cents a level. After forming the bearish candle towards the intraday low of 1 ringgit and 70 cents, we are seeing some of the hammer candle. A hammer candle was being formed, and subsequently, Penta Master has formed the higher high and also the higher low formation over the past 2 months trading period. So for now, we'll be monitoring for the next breakout above the 2 ringgit and 43 cents a level. Should price breach above the 2 ringgit and 43 cents, we're expecting our Penta to trend higher towards the 276 or even towards the 315 level, with your stop loss point located below the 2 ringgit and 17 cents. This could be the healthy breakout, the sideways consolation for investors to digest their gains, and subsequently for the next wave on the recovery towards the 276. On media, price has recovered from the low of around the 25 cents level. Since then, we are seeing a bullish divergence signal on top of the 25 cents level. The price has been trading lower, but the MACD indicator has been trading higher during this period of time. And subsequently, we did see media has formed a 2 to 3 day recovery to just towards the EMA 60. It rejected the EMA 60 on the next day itself, and subsequently traded on a sideways manner. But on last Friday, we are seeing price has rose and so close above the EMA 60 level, accompanied by some of the improvement in volumes being traded. So for now, we'll be monitoring for the breakout above the 41.5 cents level. It did breach above the 41.5 cents level on last Friday, but we did not see a closing above that. So until we can see a closing above the 41.5 cents, then only we can see further upside for media towards the 48.5 cents, which is the EMA 120, or even towards the 54 cents level, with your stop loss point located below the 33.5 cents level for media. On INSAS, price has also seen some of the recovery pattern from the low of 73.5 cents level. Since then, price has been forming the higher high and also the higher low formation over the past 2 months trading period. Price has again made a good breakout above the 80 cents level. It made a good breakout and subsequently it retested the EMA 120 and subsequently traded on a sideways manner. So for now, we'll be monitoring for the next breakout above the 89 cents. Should price breach above the 89 cents level, we might see further upside for INSAS towards the 94 cents or even towards the 1 ringgit and 2 cents level. Your stop loss point is pegged below the 82.5 cents should there be a breakout above the 89 cents level. On post on Malaysia, price is seeing some of the technical recovery following the potential bullish divergence signal on the short-term basis. Price has been again trended towards the low of 3.08 level. Since then, price has formed some of the bullish divergence signal, and subsequently, price has been recovered and traded on a sideways manner over the past 2.5 months trading period. For post Malaysia, we need to monitor for the breakout above the 3.82 level. Until we can see a breakout above the 3.82, then only we can see further technical rebound. So this could be just on a technical recovery play towards the 417 or even towards the 445 level, with your stop loss point pegged below the 349. Everything appears to be quite positive for now on post Malaysia. As you can see that the MACD indicator has been forming the higher high and so the higher low formation. It has been trading mostly above the zero level over the past couple of weeks, whereas our RSI has been flirting near the 50 level as well. Last two company for the day will be firstly ES Ceramics. ES Ceramics is still on a downtrend formation, so any recovery from now will be just taken as a technical rebound play. We are seeing a bullish divergence signal as well on ES Ceramics. Price has been trading lower, but the MACD indicator has been forming the higher high and also the higher low formation. And recently, ES Ceramics has recovered and closed above the EMA 60 level, accompanied by some high volumes being traded on ES Ceramics. So for ES Ceramics, we need to monitor for the breakout above the 22 cents. Only we can confirm for a technical recovery towards the 27.5 cents or even towards the 31 cents level, while the support is located below the 19 cents should price breach above the 22 cents level on ES Ceramics. If you look at the weekly chart, this is certainly potential recovery play. You can see that the volumes has been slowly been creeping higher over the past couple of weeks, and price has mostly rejected the EMA 20 days level. But recently we are seeing some of the potential recovery beyond the EMA 20 level over on the weekly chart. Last company for today is our YTL REIT. YTL REIT has again recovered from the low of 1.07 level. Since then, price has staged a mild recovery just towards the EMA 120. It traded on a sideways pattern over the past two months trading period. So for YTL REIT, we are seeing this could be the potential trend line breakout, the pullback on a sideways pattern, and a potential recovery to see YTL REIT to trend higher towards the first target price at the 1 ringgit and 21 cents or even towards the 1 ringgit and 24 cents level. Your stop loss point will be located below the 1 ringgit and 13 cents level for YTL REIT. Everything appears to be quite positive on YTL REIT right now, as well as most of the REIT counters. If you look at the REIT index, we are seeing a good recovery play on the REIT index from the low of around the 850 points. It did form the W-shaped formation breakout above the 880 points level, and subsequently it continues to creep higher, maintaining its position above the EMA 9 and also the EMA 20 level over the past 2 months trading period. If you have any questions, you can put in the chat box and I'll reply you shortly. Muda earlier we thought that price has staged a technical flat formation. This could be the potential flat formation or breakout towards the 320 level, but instead, it reversed its position after the company has announced the weaker set of corporate earnings. But the weaker set was corporate earnings. If you look at into the financial statement, it's actually one-off adjustment. We did see a very huge amount of insurance claim from the previous corresponding year. So if you normalize that, the Muda's financial net profit is actually on a gain instead. If you strip off the one-off insurance claim or insurance gain from the previous corresponding quarter. So on technical wise, we are seeing Muda still on a pullback phase for now. We are seeing the next support located towards the 1 ringgit and 61 cents level on Muda. So until we can see a good recovery play on Muda above the 1 ringgit and 62 cents, then only we can confirm that price could be heading higher towards the 2 ringgit or even towards the 2 ringgit and 40 cents level. So the immediate target price will be located towards the 2 ringgit. Should price pull back towards the 1 ringgit and 61 cents and recover, the immediate target price will be located towards the 2 ringgit, followed by the 2 ringgit and 40 cents level. For now, we are still seeing a further weakness on Muda until we can see something like this, a bullish engulfing candle for recovery play. Then only we can confirm that price could be heading higher. Similarly, Pekka has seen this sell-off towards the low of around the 78 cents level. Since then, price has staged a technical rebound towards the 91.5 cents, and it did breach above the 91.5 cents level on last Friday, accompanied by some of the mild improvement in volumes. For now, we are seeing further bargain hunting activities on Pekka towards the 1 ringgit psychological level, or even towards the 1 ringgit and 6 cents. Any recovery from now will be just taken as selling the strength strategy for Pekka, since that price is still on a downtrend formation. While any pullback below the 78 cents, then you have to cut loss immediately. For Upcom, earlier we thought that this hammer candle on top of the EMA 20 level will see a recovery play, but instead price continues to just trend marginally lower back towards the previous hammer candle low of around the 64 cents and recovered. So this could instead it pull back and form more support on top of the 64 cents that we are seeing further upside for outcome. This could be the potential breakout pullback and the continuation pattern towards the 91 cents or even towards the 105 cents level. Your stop loss point will be located below the 64 cents level for outcome. If there's no further question for today, then we'll end the morning briefing. Thank you.